welcome to my YouTube channel, The Accounting Educator. I'm Safir. I'm a senior lecturer in accounting and finance in a UK university. I also work with ACCA as an early career investor. This video is relevant if you're currently studying financial accounting, preparing financial statements as part of your AAT level 3. In this video, I will be covering task 3, practice assessment 1, AAT practice assessment 1. Now, this task is all about trial balance. And if you look at the different stages of accounting, so we have transactions, and then we have financial documents, and then we have books of prime entry, also known as day books, and then we have ledgers. And then after the ledgers, the next stage is trial balance. And trial balance is basically a summary of all the ledger balances. So we will be coming across things like, initial trial balance of what goes where, debit and credit, in terms of the whether something is an asset or a liability or expense or income. We will also come across things like correction of errors, and then of course checking and any sort of reconciliations. It could be bank reconciliation, or it could be ledger balances reconciliations as well. Things like trade receivable control account, for example, or trade payables control account, for example. So and then of course in terms of the extension of the trial balance, we'll be preparing some of the extended trial balance as well. What item goes where. So when we are extending the trial balance, remember what we are doing literally that what item goes where in the financial statement, which is the next stage of the accounting after the trial balance, as you know. So the first part of this is pretty straightforward. So this is kind of assumed knowledge from AAT level 2. So complete the following statements about classification of accounts. So classification of accounts into, remember, asset, liability, expense, income, and capital. And rent received, we know that anything which says received, that's your income account, because it's an increase in economic benefit for the business's point of view, so an item of income. And then loss on disposal of a non-current asset, this is your expense. Any loss which is your expense, or it is expense of the business. So a couple of easy marks to start with. Then this one is in relation to the correction of errors. Again, you studied correction of errors as part of your AAT level 2, but perhaps, the style of the question was different from this. And what we need to know in relation to the correction of errors, that there are two types of errors. Errors that are disclosed by trial balance, and errors that are not disclosed by trial balance. In other words, the errors affecting your trial balance and errors not affecting your trial balance. So first of all, if I talk about the errors which do not affect your trial balance, things like error of omission. So if you complete an entry altogether, if you completely omit an entry altogether, of course, then it would not affect your trial balance, because you have not recorded anything on debit side or credit side. So therefore, your debits and credits of the trial balance will be same. So it would not affect, or it would not be disclosed by your trial balance. Similarly, error of commission. So where you, instead of recording one expense, you recorded another expense, but actually amounts you have recorded on debits and credits correctly. So therefore, it would not affect the trial balance, so it would not be disclosed by a trial balance. Similarly, error of principal. So where you recorded an asset into expense, or vice versa, or in capital income into revenue income, and vice versa as well. But again, because you have recorded the same amounts on the debits and credits, it would not be disclosed by a trial balance. And similarly, error of original entry. So for example, the amounts that you have recorded on the both sides as the debits and credits are the same, but incorrect amounts. So for example, the amount was 1,000, but you recorded it as 100 on debit and credit side of the trial balance. So therefore, it would not affect your trial balance, or it would not be disclosed by a trial balance. It can also be things like, compensating errors. So where you made an error on debit side 100 and credit side another error 100. So one error is compensating for the other one. So again, it would not be, those errors, compensating errors would not be disclosed by a trial balance. And similarly, if you are recording, if you reverse the entry, so for example, sales, cash sales, and then what you recorded it, sales debit and cash credit. So in other words, that you just completely reverse the entry. And again, it would not affect the trial balance. It would not be disclosed by a trial balance. So those are the errors which will not be disclosed by trial balance, but there are errors which are disclosed by a trial balance, which means that you only recorded an entry, for example, a single entry on one side, but you did not make any entry on the other side. So for example, a cash sale, you have not recorded cash at all, but you just recorded sales. So you can see that your credit side will be higher than the debit side. So it will be disclosed by a trial balance. Similarly, if you record two debits or two credits, so because remember the dual effect of a transaction is that you will be recording something on debit side and something on credit side with the equal amount, according to double entry rules. So you can see that in that case, if you recorded two debits, your debit side will be higher. And if you recorded two credits, your credit side will be higher. So again, it will be revealed by a trial balance. It will be disclosed by a trial balance in that sense. Yeah. Or if you recorded different amounts on each side, so different amount on debit side, different amount on credit side, then of course it can be revealed by a trial balance. Okay, so I just thought, just to give you a context of that, so it might be easy to kind of understand why this will be disclosed by a trial balance and this will not be disclosed by a trial balance. Okay, so certain error will be disclosed by the trial balance. Complete the statement for each error identified below. The first one is an invoice which is completely omitted from the accounts. Now remember, error of omission does not disclose or is not disclosed by a trial balance. So therefore so the option they're giving is will or will not. So of course we know that this will not be disclosed by the initial trial balance. The entries made with regards to an invoice for £100 for parcel deliveries are completely reversed. So remember, reversal of entry, you still recorded same amount on debit side and same amount on credit side. So therefore, this will not be disclosed by initial trial balance again. Third one, a bank payment is made for clearing supplies. The correct figure is entered into bank account, but no other entries are made. So you can see that double entry is not being made here. So it's only recorded on one side. So of course this will be disclosed by the trial balance, because as you can see, the bank payment will reduce the bank. Okay. But what about the cleaning supplies? So of course the expense we have not recorded it. So in other words, that credit side will be lower and debit side will be higher as a result. So therefore that this entry will be, this error will be disclosed by the initial trial balance. The figures on the purchase invoice for inventory are eligible and wrong figure is entered into the ledger accounts. Again, wrong figure on both accounts. Then of course that this error is error of original entry. So this will not affect the trial balance because you recorded the same amount of the debit and credit. Okay. Let's move on to the next one. So next one is all about bank reconciliation statement. So this is something that you already studied in your level 2 as well, and perhaps as part of your level 3 as well. So they've given us the balance on the bank statement. They've given us the cash currently shows a debit balance. So this is a cash book balance and the bank statement. And then they've given us the following items. Produce the bank reconciliation statement, use minus signs to show any overdraft as negative figures. All other figures should be positive. Now, the key thing here is they can give you a question like this. They might give you a cash book and then you might have to make some entries in the cash book and calculate the revised cash book balance. Or they could give you a question like this as well, the way you have to make some adjustment in the bank balance. So something we call, of course, bank reconciliation statement. So we reconcile that balance with our cash balance. Okay, so the starting point will be, of course, the bank statement balance. So that's given to you overdrawn, and remember they told you that use minus signs to show any overdraft as negative figures. So that's exactly what I'm doing. So 30.76. And we need to determine which items we will be making adjustment here. So anything that which needs to be done in the bank reconciliation statement, anything that which needs to be added or deducted in your statement balance, anything which we have to do something in the cash book, we are not going to adjust it here. That will be adjusted in the cash book. So bank charges of £50 appear on the bank statement. Well, then we need to update that in the cash book. So it's nothing to do here. A bank transfer for 150 has been received from Jack Limited. It appears on the bank statement, but has not yet been entered in the cash book. So again, that's something that needs to be done in the cash book. A check for 250 from TS Martin, which Harun has paid into the bank and recorded in the cash book, has not yet been recorded in the bank statement. So of course that this we will need to record it here. And how we will record it, because remember that this is check from TS Martin. So of course that this will increase the balance. So in the drop-down menu, of course, this will be TS Martin. And we are adding it, of course, and that's 250. Now, remember that it is up to 2 decimal places. So those little details are important for your exam point of view. Okay, the next bullet point, Harun has paid a check for 85 to Rosie Flowers. This has not yet been recorded in the bank statement. So in other words, we will be recording it here. Rosie Flowers. And remember, we are still following the instructions that use minus sign to show any overdraft as negative. All other figures should be positive. So in other words, that although we know that we are deducting it, but we'll still be recording it as positive figure here, but we'll be deducting it, of course. So this is 85.00. And this will give you balance as per cash book. So which will reconcile with our cash book balance. In other words, if all of the if all of the entries have been made in the cash book. So in other words, so 250 minus 85 minus 30.76, and that gives you basically 134.24. Now you can see that this will be a positive balance. Why? Because you can see that this 250 is money in the bank came in, and this has been paid out. And then of course the minus the overdraft. Okay, let's move on to the next part of this task. And this is quite important. And this is, you will tackle it better if you understand the correction of errors correctly. So I will try to give you as much explanations as I can here, but it's important that you are absolutely happy with that topic. The trial balance has been produced for the year ended 31st of March 2020. The debit column totals is this much, 71,652, and the credit column is this much. Prepare the entries to correct the following errors using the blank journal below. Narratives are not required. Fine. The closing balance of inventory has been omitted from the accounts. It is valued at 2870. Now we know that closing inventory, it goes on the statement of financial position as an asset debit, and then it goes on the credit side of the statement of profit and loss as part of your cost of sales. Remember, cost of sales, opening inventory plus purchases minus closing inventory. So it will be closing inventory, statement of financial position, and then closing inventory, statement of profit and loss. And what's the amount? Amount is given to us, which is 2870. Now they did not tell us anything about the decimal places, so I'm not recording it. but in exam, it's important that you follow the instructions. So again, 2870. So that's the first one. Harun has decided to use some of the savings to expand the business. He has paid a personal check into the business account for 2,500. This has been posted to the correct accounts, but the incorrect side of each account. So this is reversal of the entry they did. Now remember that this is investment of owners into the business, in other words, which is bank, of course, debit and capital credit. So what they done is they recorded as capital debit and bank credit. So first we need to remove the effect of the error and then record the actual transaction, the actual entry. So in other words, that it will be twice the amount. Why? 2,500 to reverse the entry to remove the effect of the error, basically. And then the second one is, of course, that we were supposed to record it. So bank will be debit and capital will be credit. With how much amount? It will be 5,000. Why 2,500? To remove the error we made, and 2,500 because we were supposed to do it. Okay, a payment of 50 rent has been correctly entered into the bank but omitted from the relevant expense account. Now, this is the error that which will affect your trial balance, remember. So if an error affects your trial balance, and the other side of the correction will be suspense account, okay? So as you can see, a payment of 50 rent has been correctly entered into the bank, but omitted from the relevant expense account, which is a rent account, of course. So it will be rent account debit. And it will be suspense account credit. Okay, with the how much amount? Of course, whatever the amount was, which is 50. Okay, the last adjustment we need to make here, the total gross column of the purchase return day book has been overcost by 100. Now, okay, so the final one here is the total gross column of the purchase return day book has been overcost by 100. Now, purchase return day book has 3 columns, as you know, gross and net and VAT. Now, the gross column, remember that amount goes into your payables ledger control account, and it goes on the debit side of the purchase ledger control account. Remember, it's in relation to the purchase return or the discount received. So therefore, we overcosted the debit side of the purchase ledger control account. So what we need to do in order to remove this effect, that we need to record 100 on the credit side of the purchase ledger control account. And the other entry, the other side will be, of course, suspense account. So in other words, suspense debit with 100 and payables ledger control account credit with 100. Okay, so the final one here is the total gross column of the purchase return day book has been overcost by 100. Now, purchase return day book has 3 columns, as you know, gross and net and VAT. Now, the gross column, remember that amount goes into your payables ledger control account, and it goes on the debit side of the purchase ledger control. Okay, now the final part of this task is some of the adjustments that we need to make. So opening inventory, as you know, that it only goes as part of your statement of profit and loss, as part of your cost of sales, basically opening inventory plus purchases, remember. So it will be debit side of the statement of profit and loss. That's 22,650. And then the closing inventory. Again, closing inventory, remember that where it goes. So it goes on the debit side of the statement of financial position, which is 25,420. And then it also goes on the credit side of the statement of profit and loss. Remember, opening inventory plus purchases minus closing inventory. So in other words, on the credit side of the statement of profit and loss, 25,420. Okay. And then we have loss on disposal of non-current assets. And we know that loss on disposal of non-current asset is an expense. And therefore, it will be on the debit side of the statement of profit and loss. So that's 200 there. And what we need to do here is that we need to calculate whether it is profit or loss, depending on amount. So it looks like it's profit. As you can see, the difference between these two. So credit side of the statement of profit and loss, which is 189,695, minus, of course, the debit side, which is 162,505, which gives you, of course, 27,190. And remember that this profit is added in your capital, which means that it will be on the credit side of the statement of financial position. So which is 27,190. Okay, so as you can see, the over extended trial balance is balanced, which is a verification that your answer is 100% correct in this part of the question. Okay, so I hope that this was helpful. So please watch out for the other tasks as well, as I will be making more videos on the remaining tasks of the financial accounting practice assessment 1 as well as practice assessment 2. Thank you for watching. It's not a game.